here. My name is Onlin Wang. Thank you everyone for joining us. I use he and pronouns. I'm a member of the DSA International Committee, where I serve as a co-chair on the steering committee right now. And I also help organize the China Working Group, which helps put together this webinar today. So just to introduce the webinar series and what this one is about, the China Working Group has been putting on webinars since last December. There's been a sharp upsurge in interest in the political affairs and governance process of China. And we want to bring on experts, scholars, people who have been examining the Chinese governance process from a socialist perspective, especially to help illuminate these processes in a way that help inform our own work in the Democratic Socialists of America or for any organizers here in the US at all. The subject of today's webinar, how China is popping its real estate bubble, is one that we sent out a poll for last year of members in DSA of just what people wanted to get to know about China. And this was actually the #2 vote-getting subject, how China is managing the real estate bubble. And so just for a bit of additional context for those who might need it, the economic growth of China is probably a story you've heard to some degree about. And a significant portion of that economic growth, that rise in GDP, came from the growth and development of the real estate sector in China, especially through the 90s and 2000s. Starting in 2021, though, the Chinese government has embarked on a series of policy measures to try and restrict the excessive growth of that real estate bubble and indeed even shrink it in a controlled manner. These policies have been inspired by the observation of the aftermath to the 2008 financial crisis in the US, which itself was caused by a housing bubble. And so I think a lot of people, especially those who are working on housing organizing in the US, housing policy, have questions and have an interest in better understanding how this process is being carried out. And so that's why we have here today one of the most fitting guests, I think, to talk about this subject, Professor Radhika Desai. But this webinar is also being co-hosted by the Housing Justice Commission for the Democratic Socialists of America. The Housing Justice Commission is one of our national level working groups, which helps support organizing around housing justice issues by DSA chapters. And so with that, before we get to the presentation, I want to turn this over to Harrison from the Housing Justice Commission Steering Committee to say a few words and introduce themselves and the work of the HJC as well. Now, Harrison, can you take it away?
Thank you so much. Hi, everyone. My name is Harrison, he, him from DSA LA, the LA Tenants Union, and the HAC Steering. We actually don't have a chair or any kind of formal structure. We just have like a steering committee that runs the thing. Our primary focus is tenant union formation and tenant union organizing. We do that through the Emergency Tenant Organizing Committee, which is a training series we host once every quarter. And we've started since 2022, 10 new tenant unions. We have a whole mess of new cadres that are in the process of forming organizing committees to form new tenant unions and all this kind of stuff. We've had over 500 DSA members go through the training. And we've represented, I think it's like 65 chapters, or at least had 65 DSA chapters in representation through eTalk. Our political education, our sort of guiding principle or guiding document is our statement on social housing that we call the 4 principles of social housing. And it's that the 4 basically like characteristics of what we would consider to be housing in a liberation sense, liberation from private property, from landlords and rent altogether, and eventually from the state, right? Uh, Things like democratic control, uh, sustainable and high quality universal access, all of these kind of things. You can find all of this on our website, which I'll drop in the chat in just a minute. But basically, we use that not only to uh, guide our organizing, it's also reflective of our organizing. So our unions are democratic, they are sustainable and high quality. We want them to last for years. We want them to last for generations because um, ultimately we will need organized tenants, we'll need organized working class formations, even in a socialist state, to push it past the contradictions of a socialist state. So that's why, for us, this was an interesting topic to get involved with. Not only to learn about what housing looks like and how the a socialist state can structure itself in relation to property in a way that maybe we in the imperial core can't really conceive of, but also to approach the idea that it's like there will still be a need for people to come together into groups to further flatten the contradictions that still exist even within a socialist state. And that's our website. It's got all that stuff on it.
All right, thank you, Harrison, and please check out the great work of the HHT, especially if you're involved in tenant union organizing and housing justice organizing of any kind here in the U.S. And please feel free to reach out if we can be of support as well. But with that, that covers introductions from the International Committee and the Housing Justice Commission. Professor Desai, can I turn this over to you? And or sorry, let me apologize. Let me give the briefest of introductions to Professor Desai here. Professor Radhika Desai is a member of the International Manifesto Group and has also a co-host of the Geopolitical Economy Report, where they put out important policy analysis and geopolitical analysis that affects the work that pretty much, and rather it overshadows pretty much the work of all of us in a lot of ways. So I encourage people to check out that work. We'll leave instructions for how you can follow that. But Professor Desai has been a longtime commentator of policy analysis in China. And so I think she's a perfect candidate to talk about this. You can find her some other work about hers discussing this very subject as well. So we really appreciate her time in giving a presentation to the Democratic Socialists of America. Professor Desai, can I turn this over to you?
Thank you so much, Anlin. It's really a great pleasure and honor to be part of this. I think that I'm particularly pleased to be addressing members of the Democratic Socialists of America at this particular point in time when the barbarism, literally, of capitalism is more manifest than ever, whether it is in the personality of the president or in the actions of the United States around the world. And of course, the consequences of these, not just the Trump administration, but also previous administrations on ordinary people in the United States, on working people in the United States. So this is more manifest than ever. And I think along with it, the urgency of socialism is being felt more than ever. So thank you very much for inviting me. Just a couple of tiny corrections, or perhaps important corrections, because there were some recent changes which you may not be aware of. But so the first thing is that I'm the convener of the International Manifesto Group, and it's a group I started back in 2020 when COVID first started, and we've just grown up into a broader kind of discussion group that tries to keep track of world events, and we do fortnightly webinars. So please check us out at www.internationalmanifesto.org. I think you'll really like it if you're part of this of the DSA. Secondly, I used to my program Geopolitical Economy used to be hosted on Ben Norton's channel Geopolitical Economy Report, which he named precisely because he really liked my book, Geopolitical Economy. But now I have my own channel, which Ben encouraged me to create. And so it's called Radhika Desai, Geopolitical Economist on YouTube. So please check it out. Okay, let's get down to the real work. So what is China's property bubble, and will it lead to a crash like that of 2008 in the United States, which triggered or rather, yeah, which the 2008 crisis, which is often called the global financial crisis, but which I prefer to call the North Atlantic financial crisis. And we can discuss that, but basically, it did not affect the whole world. Does not deserve to be called global. It affected primarily the United States, and then all those countries that were heavily invested in the toxic securities generated by the bubble that preceded the crash. And of course, parallels are often drawn with the Japan's property crash in the late 1980s and early 1990s, which was also followed by a long slump, often called Japan's secular stagnation. Another host of points that we can discuss later on. Now, there's a lot of coverage in the Western press about the property bubble in China in recent years, particularly since the pandemic. And all of this talk must be placed in the context of the West's extremely contradictory views of China, expectations of China. So, for example, China is on the one hand, dismissed as, not really as important as the United States. But on the other hand, Western commentators are constantly demanding that China provide the locomotive for global growth. The causes of China's success, of course, are typically attributed to capitalism. But in fact, of course, the idea is that after 1978, China essentially became capitalist and so on. And of course, but at the same time, whenever anything goes wrong in China, it is blamed on China's socialism. But in fact, China's successes are definitely due to its socialism, something that will become apparent in the context of our analysis of this bubble as well. When we try to understand the property bubble, we must also uncover the realities of the property bubble from under a heap of Western misinterpretations of China, including like ideas that China went capitalist after 1978. And of course, there is also the tendency of the Western media, Western scholarship even, to be constantly predicting the demise of China, the crash of China, pointing to the alleged fragility of the Chinese economy, and so on, even while China is powering along, or was powering along until recently at 8 and 10% growth rates. And even now, with the relative downgrading of the growth rates, China still has growth rates that are almost twice as high as that of the United States. And there are other issues involved there as well. So we've seen in the press, for example, alarmist pictures of can you see my screen here? Yeah, alarmist pictures of, China's property bubble, giant empty apartment, row upon row of empty apartment blocks. So here you have all these apartment blocks which could house, hundreds of thousands of people, and you can only see two people in the picture, or pictures of empty malls, for example. And then here's another type of picture that was quite widely circulated, a kind of people demanding from a bankrupt property development company, demanding their money back or demanding the apartments that they were supposed to receive. And of course, these images are supposed to invoke images of bank runs like this that took place after the 29 crash in the United States. So we are supposed to sort of imagine that this is what's happening in China. But the reality is really quite different. There are property bubbles, and there is no doubt that there has been a property bubble in China. The real question is how it happened, why it happened, with what implications, and how has the government dealt with it. So let's try to understand that. So first of all, let's understand that there are property bubbles and there are property bubbles. If we are going to compare it to what happened in the United States in the first decade of the 21st century, first of all, one big difference is, who was getting indebted. and who were the actors essentially? So, first of all, the people who were getting indebted, the entities that were getting indebted, were not individual buyers of homes, although there is some degree of mortgage lending in China. Overwhelmingly, people in the China buy houses on the basis of their savings, while they may have some mortgage borrowing as well. So that's one big difference. The second difference is that the movers of this, this increase in house prices, etc. In the US, it was banks, especially powered by an easy money policy, which essentially was resorted to in the aftermath of the 2000 bursting of the dot-com bubble. So the dot-com bubble, with its wealth effects, had powered growth in the late 1990s. So it's kind of brought the US out of the doldrums that the US economy was in the early 1990s. Which is the reason why, for example, George Bush Sr. is supposed to have lost the election, about which Clinton's campaign manager, James Carville, quipped, "It's the economy, stupid," because the economy was not doing well. And so the economy started doing well, in large part powered by this dot-com bubble, so that the people who owned the shares, which were going up in price, were then able to borrow by using these shares as collateral. And this borrowing then fueled a lot of consumer spending. It's largely confined to the better off classes in the United States. When that bubble crashed, the Federal Reserve made an explicit policy decision to have an exceedingly easy money policy, so that they would be able to expand the borrowing, which was now taking place not on the basis of overpriced shares, but was now going to drive up the prices of houses and, of course, lead to an enormous amount of mortgage borrowing and so on. So the banks were the movers in this case, and in the Federal Reserve itself. Whereas in China, what has happened is that, thanks to a late 90s shift in policy regarding the purchase and sale of property. And remember, in China, you cannot individually purchase. You cannot purchase or sell land as such. Land belongs to the state. But what you can purchase is use rights to that land. So when we talk about land sales in China, it's typically use rights for that, use rights of land. And local authorities essentially began to sell use rights to land as a major source of revenue at a time when demands for their services were growing and other sources of revenue were not yet available. So they began to do this, and so they and developers were the entities driving this, and the people who were doing most of the borrowing were not individual buyers of houses. They were typically the developers who borrowed money in order to build these homes and so on. So, yeah. Secondly, there's, when these bubbles were being inflated, so the 1990s dot-com bubble, the 2000s housing and credit bubble, there was an enormous amount of hype. Just as, for example, there is hype around AI these days, because AI has become another bubble now within the US economy. So back in the 1990s, for example, Greenspan essentially said, "Bubble? What bubble?" And there is no bubble in the stock market. But while at the same time, sort of, chiding stock markets for their irrational exuberance and so on. The idea being that he was kind of, like you chide a naughty child, but you're really very proud of the fact that they're so cute and so on, and they're doing such cute things. So Greenspan was actually fueling the very bubble about which he was chiding stock markets back then. Of course, inevitably, the dot-com bubble crashed, and then they fueled, with the easy money policies, the housing and credit bubbles. And about that, Greenspan said, and I discuss this in my various writings, including in my book, Geopolitical Economy. Greenspan explicitly said, he said, there can never be a national property bubble, he said. There are such differences. All housing markets are local, and he used this idea. There's a Maine in Portland, and there's a Portland in Maine, and there's a Portland in Oregon. And he says the housing market in Portland, Oregon is completely different from the housing market in Portland, Maine, etc. So he actually denied that there could be a national property bubble, even while he was engineering that very property bubble. So there is an enormous amount of hype. And of course, the prices of housing prices actually went up by an enormous amount. So let me show you a couple of other slides here. Here's the index of US house prices. So you can see here, this is from 1980 onwards, but you can see that the house prices were rising, and they particularly rose steeply in the first part of the 21st century. Then you had the housing 2008 crash, and then they declined. Mind you, since that time, they have, of course, been rising again. And remember, this is not this is the index. This is not due to some vast amounts of housing construction taking place. This is increases in the prices of actually existing housing stock on the most part. The corresponding chart for China. This is another chart which shows you again house prices, annual changes in house prices. So you go from 1980 onwards. This is the uptick we are looking at. Then there is a slowdown, and then there are further increases in house prices. But the corresponding chart for China looks like this. So this is from 2005 onwards. But so there is a bubble, but it is not as steep. The rises are not as steep as you might think. So this is also something you have to, and it is not driven by hype. It is driven by some other mechanisms, which we will try to understand. Overall, basically, the regulatory structures are also very different. So, in the case of the U.S. housing and credit bubbles, it was in the environment of neoliberal deregulation that this kind of housing bubble occurred. In particular, the 1999 repeal of the Glass-Steagall Act, which essentially permitted commercial banks, which were hitherto prevented from engaging in speculation and so on, it permitted them to do so, which is what they proceeded to do. And of course, eventually, they were then bailed out because they were too big to fail. So this was the argument. But of course, precisely because they were too big to fail, they were originally under the Glass-Steagall Act, which was passed in the 1930s when the banks went bankrupt. That under the Glass-Steagall Act, they were precisely prevented from speculation because they were too big to fail, because they were so systemically important to the economy, so their activities were highly regulated. In China, you have a very, very different financial structure, which is largely, first of all, there's not much of a stock market there. Most of the productive investment takes place through borrowing from banks. And the banking structure is geared to prevent speculation, to keep banks focused on financing productive activity. And whatever else you may say about house building, it is productive activity. It did get out of control, but we will see why. But it's not speculating in existence. So this is another difference, by the way. What happened in the United States is an increase in the price of already existing housing assets. What's happening in China is a vast expansion of the building of housing. This is what was being powered. This is also quite an important difference. So the overall financial structure is aimed at powering the productive economy. Moreover, as President Xi pointed out, I believe in the early 2020s, I think in 2021 or thereabouts, he said, as part of the government's efforts to try to control the housing bubble. He said houses are for living, they are not for speculation, and this is the attitude. By contrast, in the early 2000s, Greenspan was essentially asking American voters to use their homes as ATMs, so that you remortgage your homes, you get more money, you spend more money, and essentially drive a consumer-driven economy rather than a production-driven economy. Now, and so that's it. And eventually, in the case of the 2008 financial crisis, the housing and credit bubbles, the reason they burst is also very interesting. As I told you before, they were fueled by an easy money policy, so keeping interest rates at around 1%. We all think that the easy money policy began after 2008. No, it originally began after the bursting of the stock market bubble dot-com bubble in 2000. So for a long time, interest rates were kept fairly low at about 1%. But eventually, what happened is that with the rise in the prices of primary commodities, there was a very big pressure. And by the way, the rise in the price of primary commodities was directly connected with China, because as China was growing, it was demanding more and more of these primary commodities. And the primary commodities being inherently of an inelastic nature, the supply of them being inherently inelastic in the sense that they, mining takes a long time to come on stream, agricultural production is seasonal, etc. So this means that there cannot be an immediate supply response to an increase in price, which means that prices can go on increasing. So because of this inflationary pressure, the Federal Reserve was forced to start raising interest rates, and it did exactly what it's done recently. Little by little, 25 basis points at a time, they began to increase interest rates, and they did it very gingerly because they knew that if they shocked the market, as Paul Volcker had done back in the late 70s, early 80s, that this would prick. Paul Volcker did that because he didn't have a asset bubble to worry about. But the Federal Reserve now did. In the 2000s, it did. So they were very gingerly about it. But once interest rates hit something like 5.25%, they were high enough to prick the bubble. Yeah. So this is really quite interesting. So eventually, if Alan Greenspan or the Federal Reserve more generally had their druthers, they would have kept inflating the bubble, because that was the only engine of growth in an otherwise decrepit, senile US economy. So they would have continued to do it in this case. So, but of course, they were prevented by circumstances in the end. The wider context prevented them. Eventually, the crash came. In the case of China, the first reports, the report about Evergrande not being able to pay a certain category of its creditors when it came, I think in 2021 or thereabouts, this was actually provoked by the Chinese government's action, which was to essentially to control the bubble. So what was the action they took? They basically said that further bank lending to property developers would be based on whether or not banks remained on the better side of three red lines. Those red lines were: what is the ratio between your debt and your assets and your liabilities? What is the ratio between your debt and your equity? And what is the ratio between debt and cash? So there were clear ratios established for all of these three things, and only if property developers met every one of them would they be given more money. And that is the point at which Evergrande found, one of the biggest property development companies in China at the time, and possibly in the world, found that it could not pay, and that's when we all began to hear about the bursting of the property bubble in China. So that's a big difference. I mean, the pricking of the bubble was done by the authorities in order to control it, in a way as to kind of essentially wind it down. And so that's essentially what they did. And by the way, people talk about this accumulation of debt in China, but this accumulations of debt is not necessarily a bad thing. Particularly in a bank-dominated financial structure. So essentially, when you have a financial structure in which most of the capital required for productive investment is raised by borrowing from banks, there's bound to be debt. The problem is not that there is debt. The question is, how is it invested, and will the returns on that investment be adequate to pay the interest and eventually pay off the debt? This is what matters. Yeah, I've already said that the debtors were not in China were not homeowners but developers. Furthermore, the government did not bail out the creditors of these developers. So, for example, if some other people, including foreign investors, had thought, oh, Evergrande is going to make a lot of money, I'm going to lend Evergrande lots of money, or supplier credit or whatever. The government did not necessarily bail out the creditors, which is what they did in 2008. Remember, in 2008, the fat cat banks who had caused the crisis got bailed out. And the ordinary homeowners who were often inveigled into borrowing a lot, often forced into borrowing a lot, they were the ones who lost their homes, lost their jobs, etc. So again, the consequences are very, very different. So the Evergrande default and the wider crisis sense of crisis it created was sparked by the prudential action of the authorities, very different, practically diametrically opposite of what we witnessed in the United States. So understanding this reality and this difference requires understanding how differently China functions. It's different from the capitalist West, and it is also different from any ordinary socialist command economy. It's not a Soviet Union type of economy. It is a peculiar mixture of overall government regulation and oversight and responsibility of an economy which nevertheless contains a very large private sector. And the other thing that we also see here in operation is the way in which China's property bubble, on the one hand, the way it emerged, and on the other hand, the way in which the authorities in China coped with it, shows you, first of all, that the Chinese have they have superior coping mechanisms. And secondly, the government in China, particularly because it is in this kind of uncharted territory, it is not a capitalist economy, it's not a command socialist economy, it is learning by trial and error how to manage the economy. So the problem is not that it's learning by trial and error. There's no other way of learning. The point is it is learning. Unlike a lot of take the Western authorities, take the United States authorities. They used to say about the Bourbons, the French dynasty of the Bourbons. They say they learned nothing and they forgot nothing, and so this is what you see in the United States. What we've had since the 1990s is bubble after bubble after bubble. Nothing is learned, nothing is regulated. There is no, a lot of noise was made after 2008 about how you were going to re-regulate the financial sector. None of this has happened. The financial sector is now sitting on a bubble, or a set of bubbles rather, the so-called everything bubble, even bigger than what you had in 2008. Okay, so the boom and the bust has been managed by the government. Ordinary working people have not been victimized other than suffering some decline in the previously mad property prices. This decline is variously estimated to be between about 10 and 30%, but this is still much better than losing your home, particularly for the ordinary person. I mean, if you were a big investor and you had bought many houses, fine. But the fact is, if if you may suffer a loss of your investment, but at least ordinary people were not losing their homes. And it's much better than homelessness, basically. And the motto of housing is for living, not for speculation, is the motto the government has followed in winding down the property bubble. The government has successfully wound it down, and it is supposed to stabilize in the next year or so. It is true that there was considerable overbuilding, but that too is being dealt with. It is also true that when the housing bubble was growing, when the property sector was expanding in this big way, at some points in time, it actually amounted to something like 30% of the economy and roughly 10% of the labor force. So that's quite interesting. So this housing bubble definitely played a role in the bounce back of China's economy and its robust growth after 2008. Another statistic that's quite interesting is that there were times when land sales amounted to about a third of local government revenues. Entire cities were built from scratch. Now, another thing I'd like to emphasize, because this is rarely mentioned, understanding why the bubble occurred and what were the implications and the meaning of it, you have to understand that it was a central part of China's astonishing rate of urbanization, which could only have been undertaken barring an enormous bureaucracy capable of doing this under public ownership, could only have been undertaken by the commercialization of China's housing. Until 1998, I believe that the Chinese authorities would provide, local authorities would provide free housing to people. Since then, there was a considerable privatization of the housing stock, and the commercialization of further construction of housing stock. And this was necessary, as I say, barring creating a vast single authority charged with building, public sector housing in China. It had to be commercialized. So China has gone from an exceedingly low level of urbanization, so about 10% in 1949, 16% in 1960, with various reverses. Both the Great Leap Forward as well as the Great Proletarian Cultural Revolution also involved some reversals of urbanization, in the sense that people used to be often rusticated, sent to the countryside for their sins, whatever it was, as part of party discipline and so on. But after these reversals, the level of urbanization reached about 18% in 1978. So with these reversals, and let me just show you a couple of, just one chart perhaps. I think, yes, that's right. Where is this here? Okay, here we are. So this is a chart of China's urbanization since 1980. So in 1980, it was roughly 19%. Then you see the steep increase. This is occurring still under a largely government-managed way. And then this urbanization continues. Since today, it is just under 70%. So this is the ongoing process. This is the process through which China has completely become transformed. Entire new cities have come into existence. Old cities have expanded massively. So there is essentially a huge rural to urban migration that has taken place. Now, another thing I'd like to say here, because I know you folks are here also interested in the housing question. Most of the urbanization in China has taken place under the so-called hukou system. I hope I'm saying it correctly, but essentially the system under which you need a permit to live in a city. And a lot of people have criticized the hukou system. They have said, oh, this means that China is controlling where people can live and so on. But think about it this way. If China, you see, by having the hukou system, China, the authorities in China, the party state in China, was taking responsibility for the housing of its people. Yeah, so it says you can't come until we have the infrastructure to receive you, to house you properly. Okay, this is essentially the meaning of the hukou system. And people also have to be where they are needed. Had there not been a hukou system, you would see, as part of this vast urbanization, you would see India scale slums. And India has all those slums at a much lower rate of urbanization. So the hukou system essentially was a managed form of rural to urban migration. Now, before this current, before the vast increase in private housing activity, private building activity, etc., there was extreme shortage of housing, of living space, and of course, with the expansion of housing, it also, in a sense, it vastly expanded the amount of housing that was available for purchase. So that was a good thing. And then you see, owning a home essentially became almost like a prerequisite for being able to marry. So if young couples became kind of considered to be a necessary thing for young couples to get married, etc. So essentially, the urban population, which went from about 100 million in 1960 to 910 million in 2023. This is the process that it went on in tandem with and was deeply intertwined with the so-called housing boom. So essentially, this urbanization, which after 2004 was faster than the rate of economic growth, it was massive. As I say, I just gave you the scale, 100 million in 1960, 910 million in 2023. The rate of urbanization, 18% in 78, 60% in 2018. The number of cities went from 193 in 1978 to 672 in 2018, etc. Now, there is a certain amount of slowdown in urbanization. People are being encouraged to live in smaller towns and villages as well. The government is also consciously cultivating a taste for the bucolic life, life in greener surroundings and so on and so forth. So essentially, the story of the property bubble is a story of a certain kind of policy-driven overlending, followed by policy-driven curbs to overlending, in the course of which property developers did overbuild. So what were the mechanisms that were at play? First of all, local authorities in the late 1990s were allowed to, were beginning at that time, they were allowed to sell land through auctions in order to raise revenue. So this raised land prices. Now, you also have to understand that local authorities had a great desire to raise revenue because in the context of urbanization, the demands for their services were also growing up. They had to have revenue to provide these services. In the course of this, then, with policies relating to lending to property developers, etc., real estate development became an engine both of the increase in local government revenues and also the increase in increase in local government revenues and the expansion of the economy, the growth of the economy. After 2008, there was, of course, as you know, the 2008 North Atlantic financial crisis did deliver to China what I call a short, sharp trade shock. So you see trade declining like this, but then also recovering pretty fast. But in the case of China, China was, had to compensate for the loss of export markets and so on. So the Chinese government essentially engineered a massive investment boom in China, which kept up the rate of growth despite loss of considerable export markets. And a few years later, already we began to hear some of the first complaints. By about 2011, you began to hear the first complaints about, vacant apartments. Now, Let me also say that many of the times when the Western press would report on these allegedly vacant apartments, they were often just photographed before they were occupied. So, of course, they were empty. But nevertheless, there was a problem to some extent. So despite these complaints, nevertheless, the boom continues. It was based on borrowing, which was again quite normal because China has a bank lending driven investment finance system. In August 2020 is when the three red lines were proposed, and this is what triggered the first default of Evergrande and then all the others that followed. So this is the government that was triggering the end of the property boom. And in September 2021, as you know, Evergrande defaulted. So what happened after this bursting of the property bubble? State loans were given to selected property developers to ensure that homes that had already been sold were actually delivered to the people who had bought them. Because part of this whole system was a system in which, by the way, this kind of system is quite prevalent in many parts of the world, where you purchase, you essentially you pay for the house quite a while, maybe a year or two before you actually take possession of the house. This is your way of, and you can do that provided the demand for housing is great enough that people will be incentivized to do this. So in those cases where the developers had gone bankrupt or they didn't have enough money to finish the construction, the government gave loans to allow this to happen. And of course, remember, China's financial sector is very substantially state-owned. So essentially, the state can create money in order to allow this to happen. And the state did do that. Many developers like Evergrande were wound up. The government also encouraged the mergers of distressed developers, and often these distressed developers were bought up by state-owned companies, state-owned developers. So that was quite an interesting thing to do as well. Local governments were given a say in which developers should be given further loans, so that because often the local governments were quite closely tied to particular developers. So both for revenue's sake, but also for the sake of the land values and property values and so on. The government has also, in fact, going back to the early 2010s, has also been experimenting with property taxes in different parts of in some of the big cities like Shanghai and so on. And again, the property tax is also quite graduated. So it's not, it began with, taxing properties of those who own more than one home or homes of a higher value or what have you, so as not to negatively affect the ordinary modest homeowner. But nevertheless, a property and a national property tax is being, a national system of property taxation is being considered. Of course, like all property taxes, it would have to be implemented by local governments. But nevertheless, this would give the government another lever to control house prices. They can, by moderating property taxes, they can allow house prices to go up. By tightening property taxes, by increasing property taxes, they can bring down the value. So it gives the government another lever with which to manage the economy. There were restrictions brought in on the number of homes individuals could own. There were people brought in, down payment, how much down payment you would have to pay became another lever. If you have a higher down payment, you will restrict property prices. If you have a lower down payment, you will allow property prices to rise. The government also acted to prevent a house price collapse because while, of course, many young people were finding houses unaffordable, what about the people? What would be the effect of a crash in property prices of people who already owned homes? And there were millions, hundreds of millions of these people. The state also undertook to purchase considerable amounts of the inventory of unsold housing stock to provide affordable housing. Mortgage rates were eased also for buyers. And in general, essentially, the government has engineered a soft landing. The government also gave local governments more funds to make up. So now, earlier these properties, land sales, and generally property development accounted for a fair chunk of local government revenues. This is now being lost. So the central government is compensating by giving local governments a new source of income, which is central government transfers. And that's been a very good thing. So often people ask at the end, if the property boom powered so much of the growth of China after 2008 in particular, what is now going to power that growth? And that's a good question, but the Chinese government has an answer for it. Growth is now going to be based on other things. It will be based on the expansion of domestic consumption. And this expansion of domestic consumption is to be encouraged by providing more of a welfare state, because you see a large part of the restriction on consumption comes from the need to save. And the need to save comes from the fact that there may not be adequate social services. So now these social services, health services, education services are being provided of a higher quality and quantity, so that individual households have to worry less about saving and can spend more. So that's another thing. And of course, the expansion of domestic consumption alongside the expansion of exports is regarded as, it's called the policy of dual circulation. So there's new dual circulation. And finally, as far as investment is concerned, the Chinese government has rolled out a system of investment in what are called new productive forces. So everything from artificial intelligence to nanotechnology to green technology, etc. The government is making massive investments in these fields, and these new industries are expected to power growth in the future. So that's my presentation to you. Hope you found it interesting, and I'm open for questions and answers.
All right, thank you, Professor Desai, and thank you everyone who are attending. If you're here, please show Professor Desai some appreciation with an applause reaction or comments in the chat. And we're going to open up questions now. There's only 3 questions in the chat. We have a number of ones we wanted to ask Professor Desai in advance as well. So we'll have a discussion here regardless. But in the meantime, please don't hesitate to submit more questions in the chat. Especially as relates to the presentation. I think there's a lot in there for us to chew on. But I think the first one, just to ask it most directly, what lessons do you think housing policy advocates or tenant union organizers or housing organizers in the US, what lessons can we take away from this process of the Chinese management of the real estate bubble?
I would say that there are 2 very important lessons. Number one, every time, whenever you have a context in which social housing, that is to say government provided affordable housing, is plentiful, there are never any housing bubbles. Yeah, that's the first thing. So essentially fighting for social provision of housing. I mean, look, if you can have socially provided education, healthcare, etc., why shouldn't there be socially provided housing? In fact, there are even movements in the West here. I'm sure you guys have heard of them. It's called Housing First. They say that a lot of people who are experiencing social problems of various sorts, whether it be addiction or other sorts of problems, what you first have to do is you have to house people. So housing and housing can drive an enormous amount of growth in the economy. So that's the first thing. Secondly, you need the regulation of the financial sector for productive investment. The reason we have got in the West these extremely destructive asset bubbles, of which housing was one, is because you have under the neoliberal deregulation, you've created a financial sector which is permitted to essentially engage in 2 things. Number one, provide debt not for investment, but to skim off the incomes of those who are earning from productive work, whether it is governments or small businesses or households. So that is why you have such an enormous overload of debt in most Western countries. And this is all unproductive debt in the sense that most of this lending is for consumption. It is not for production. Yeah. So you need to have financial regulation which keeps the financial sector focused on productive investment and explicitly prevents it from engaging in speculation. This is what Glass-Steagall did, and that's what people need. That's what we need now. And in fact, I'll also say a couple of other things. Today GDP figures are, of course, faulted for many things, and I tend to, and it's true there are many things wrong with GDP figures, but one of the things that is wrong with GDP figures, particularly in the United States, is that in the United States, financial activity, which should be regarded as a cost, is regarded as a benefit and is counted as essentially in GDP as increases in material welfare. So this artificially inflates GDP of the United States compared to countries like China or other countries that are not practicing this sort of thing and do not have such overly inflated financial sectors. But to come back to the main point, you need financial regulation. And you need a government that is aiming to keep the economy as a whole focused on productive activity and not on predatory lending and speculation.
All right, thank you, Professor. Just have one or two more before we get into more straightforwardly into the audience questions. Although I think you did cover one of them just now, so thank you for doing that. You mentioned during the presentation that there were limits imposed on home ownership after 2021. In the US, institutional housing investors like BlackRock and others have purchased housing properties at large scale over the past several years, over the past decade, really, and in the process have hiked up rents while doing so. To what extent does the newer limit on home ownership in China limit the ability of institutional investors or speculative investors to drive up housing prices? Does it impose a meaningful limit on that ability at all?
Sorry, I didn't quite get it. What was the restriction that you talked? Can you please repeat the question, if you don't mind?
Sure. If I misheard this during the presentation, then we can just scrap this question. But I thought I heard during the presentation you mentioned that after 2021 there were new limits imposed on owning multiple homes in China.
No, I think 2021 you're talking about the three red lines. 2021 is when the government imposed these three red lines. They said that further lending to developers will be determined on the basis of whether they have adequate equity to match debt, adequate assets to match liabilities, and adequate cash to match liabilities. Yes, there are, and as part of the winding up of the housing bubble, the government did impose limits on how many houses an individual could own. Yes.
All right. Thank
And
you.
I see, and I see. I get it now. So absolutely, and so you are saying that this kind of restriction would then prevent a small number of companies, private equity companies and whatever, from buying up the existing housing stock, which is absolutely what's happening. It's happening in the United States. It's happening in Canada. These days, if you are a young person looking to rent, you will soon find that practically all the properties are owned by a small number of big housing stock owners, essentially. So this old idea that, somebody rented out a second home that they had bought, on a private basis, or rent out part of their homes, etc. This is decreasingly the case. Such places cannot be found. So yes, absolutely, that would definitely put restrictions on that. I mean, the only such entity that should not be restricted from owning a lot of homes is a publicly owned housing authority committed to providing social housing.
All right, thank you, Professor, and I'll figure out a way to clean up my questions here to be more concise in the future. I want to get to one of these audience questions here that covers a topic that we have discussed in the previous webinars about climate change. Because one of the unifying planks in Democratic Socialists of America around China is calling for a pathway to climate cooperation. And so we've wanted our webinars to have a specific focus on that. And this question I hear here, I think does speak to that. It's in the chat, but I'll just repeat this here. With impending climate change and climate disaster, leading to things like uninsurable loss in value, reduced housing stock, with extreme weather events, fires and coastal erosion, reducing just total land area and populations across the entire planet. We're likely to see a new movement of people at a greater scale and potentially can learn from China's controlled urbanization process as people migrate internally. So the question here is, what kinds of systems should we be trying to build in the US as socialists in order to address this trend, this problem that we can see coming in just the coming decades? And the last note here is it seems that highly decentralized housing policies might not be adequate in the face of national scale migration shifts like this. This is a question from one of our climate justice organizers.
Okay, I mean, correct me if I'm wrong, but I think the question is assuming that we are likely to see massive migration movements in the coming. Okay. I think, I mean, of course, there will be some amount of climate-related migration, but I wonder if, well, at the present moment, for example, the amount of migration we are seeing, the migrations we are seeing are typically related not to climate, but they are related to war and the devastation of neoliberal economic policies, which are required by Western lenders and Western countries more generally. And so this creates a lot of essentially de-development and so on. And of course, they're also related to the resource plundering of Western countries. But nevertheless, I think that if we are going to see, that's just one thing. Secondly, even if we assume that we are going to see massive population movements as a result of all of these factors, including climate, I think that requires an even greater emphasis on a coordinated response, because there is no authority like a coordinated public government response, a public response, because if the scale of the problem is that big, then the individual private entities are not going to be able to solve it. You need a coordinated approach to solving that question. And then only one final thing, which is that, it seems that, I mean, I wonder if I detected a certain Malthusian tinge to it, but we have to remember that actually, practically everywhere in the world, population growth rates are now going down. I mean, the only major part of the world where they are still relatively high is Africa. Practically everywhere we are seeing actually declines in population. China is certainly going through its own demographic decline. Even India, which is much poorer than China, and generally speaking, the poorer the country, the faster the population growth beyond a certain point. Even India is now basically just below the replacement rate.
All right, thank you, Professor. There's also been reporting about how the real estate bubble collapse or management has led to increased strain on local government budgets in China. So there's a question here in the audience, basically asking if you can shed more insight on the role of land sales in government budgets. How important are they to government budgets, and how do they come to be a significant revenue source for municipal governments?
Well, I think that at some point a decision was made to allow local governments to raise revenues by selling land. This would have been part of the commercialization policy. So basically the state saying, look, we need a lot of housing in the coming years and decades. And one way of doing it would be to allow private developers to emerge and provide the housing. Of course, they would be regulated and all of that, but they would be private developers. So then, in order to do that, how land has to be sold. And if land is under the control of local governments, then they would be the authorities selling it. So then they became, of course, also beneficiaries of the revenues that were generated. So now what's going on is that essentially there are more cash transfers from the central government to local governments, so that becomes a source of revenue, right? And the second thing is that they're looking into property taxes. So, and property taxes in countries like Canada or the US, I think property taxes are a very large part of local government revenues.
All right, thank you, Professor. There's another question here asking if are there ways that I guess especially since 2021 that local governments and provinces have experimented with ways to reduce their dependency on land sales being a significant revenue source for them. Could you give any examples of that?
Sorry, to reduce their dependency on, well,
or have they been trying to reduce their dependency?
they have already lost most of that revenue. So we are already looking at a new situation in which central government transfers property taxes, and plus local governments can also raise revenue by increasing taxable activity, so economic activity within that. One of the dynamics of growth in China, people say China, I mean, I do say that China is a meaningfully planned economy. But there is one, and of course, within the various sectors, there is competition among various private actors of various sorts. But there is another really interesting part of the competition that takes place in China, which is local governments competing with others to attract people, to attract industries, et cetera, and to provide better services and so on. So I think this competition has also plays a very big role in how China develops. And so if I'm a local authority, I would say that, what can we do here to attract, some new industrial sector, expand some existing sector, which is particularly promising, from making it from small to big, and this would increase your revenues.
Thank you. That is a very helpful answer, I think. There's another question here which I think speaks to a kind of a degree of a cultural phenomenon in the U.S., which is sort of in the background of a lot of housing advocacy work, especially I call it housing policy advocacy work, which is about in the U.S. there's the home ownership is associated with the American dream, just directly, and it's sort of it colors a lot of housing advocacy because one of the downstream effects of it culturally is for people to consider housing as sort of like a private issue, sort of a non-public issue, and it's considered also in a large swaths of the U.S. to really be something that's really primarily about personal responsibility. Do you have any sort of advice for how advocates here can reconcile, the cultural and economic forces, really pushing for home ownership as an ideal, with, of course, this mounting housing crisis and trying to organize our way and legislate and govern our way out of it?
Yeah, I mean, I think I'm sure you guys know much more about this, but I feel that the contemporary housing crisis that is definitely being felt in many countries around the world, it is a result of many different factors. One is, of course, so all the different factors coming together. Obviously, in migration is one and a lot of in a lot of cases and I'm not saying we should not have migration. The point is, when you have migration, you have to make preparations for that. Where are people going to live if you're going to have more people coming into your country and so on? And this is not dealt with. This is left to the market, as if the market were going to somehow miraculously furnish this. So that's on the one hand. Secondly, there is also then this tendency to not only have a small number of operators buy up a lot of rental properties and so on, but also the increasing use of these platforms like Airbnb and so on, so that people buy houses not in order to rent to those who locally live there, but those who will rent from you for a few weeks in the year, pay you an exorbitant rent, and they can afford to pay you that, and that allows you to maintain this place, and so that's another issue. So there's a lot of and of course, property developers don't want to build unless they have a huge profit margin. So all of these problems would be solved if you said that housing must be provided by local authorities, a sufficient amount of affordable housing. And if you see, if there is a sufficient amount of affordable housing, you would never see the sort of thing that you saw in the run-up to 2008, where ordinary working people were outbidding one another in order to get some miserable overpriced piece of property. Right? Because low interest rates were allowing the young people to borrow more and more. But of course, that only stored up problems for later. Right? So all of this points to just one thing. Finally, as to this whole point about housing being somehow an individual responsibility, it simply is not an individual responsibility. Think about this. Today, with the baby boomers essentially, leaving this planet, shall we say, dying off, their children will inherit an enormous amount of housing. They will not have to lift a finger for their housing. While a lot of other less privileged people, younger people perhaps, will have to, so there is no interference. What did the child of a baby boomer do if they just inherited a house? There is no, you see, so housing has always been like that, and so I mean, and people have to live where the jobs are. If you're going to manage the economy, if you're going to provide a workforce for whatever enterprise there may be, you have to provide housing. In the old days, by the way, I mean, in many parts of the world, including, I'm sure, in the United States, big companies, in order to attract employees, would provide housing. If you had to have, say, a mine in some remote location, who's going to come there unless you provide them with housing that's nearby so that people can go and work there? So housing it's not at all an individual responsibility thing.
Thank you, Professor. That's well said as always. Um, I know you more or less spoke to this during the presentation, but if I can just sort of ask this in a different way, can you perhaps articulate a bit of the counterfactual, perhaps if China had not implemented the set of policy packages, after the Evergrande property crisis, like for example, had they not engaged in this process of managing the real estate bubble, would that have potentially threatened the high home ownership rate of like over 90% in China, for example?
If they had not acted to control this bubble, there would have been a lot of bankruptcies of developers. There would have been a lot of, and then once they went bankrupt, of course, then this would have disrupted the supply chains, because obviously, if construction is a very big part of your economy, then the developers are buying, everything from concrete to furnishings to, tiles and whatever it may be, bathroom equipment and whatever. All these things are being bought, so that supply chain would be affected. So that manufacturing input would have been affected. And in terms of the output end, all those people, if developers went bankrupt, all those people who had given developers the money, bought the flat before it was built, they would be left without a place. So it would have caused an enormous disruption. Indeed, I would say that if you consider the importance that the housing activity temporarily held within the Chinese economy, it would have led to a very pervasive economic disruption. And that economic disruption would have directly fed into political discontent. And remember, what makes to me, what makes China really such an interesting place is that, yes, it is ruled by a party state, and the party state is not, I mean, of course, there are elections and so on, but the party state is not affected by the kind of periodic, short-term election cycles and so on that we see in the West. Having said that, the party is an enormous machine. It has 100 million members. This gives the party state presence in every nook and cranny of Chinese life. And this allows the party state to prevent small problems from becoming big problems, because they have antennae going down into the society. And that is essentially how a party state has maintained the deep and broad legitimacy it has, is that it has not allowed any problem to get out of control. Yeah. So.
Thank you, Professor. I think that's good context for us here. We're at 100,000 members, so we just got to grow 1,000 times more. No problem.
Indeed, that's pretty good. I would say, well, I mean, China is also a much larger economy. Just think about it. China must have about 4 times as many people as the United States does. So I think your challenge is a little less than that, but still it's quite substantial.
There is I do see one question that just came in, which is asking about how China's how is financing for manufacturing and projects to address the climate crisis. So, Professor, no pressure to answer this one here, but Susan, who asked this, we are going to talk about this question in upcoming webinars, and I would also encourage you to check out our previous webinar with Kyle Farana on introducing the term ecological civilization in the context of Chinese governance, which we discussed this a little bit as well. We do want to cover this in more detail in the future as well.
So what's the question exactly again?
How are they financing? How does financing work for manufacturing projects as relates to the climate crisis?
I see. Well, I mean, that's a really interesting question. So remember, I said earlier that China has a financial sector which is kept focused on financing productive activities, right? And productive activities includes the manufacture of all these wonderful things that China is producing, which is part of its effort to address the climate crisis, right? So it is producing solar panels, it is producing wind turbines, it is producing electric vehicles and everything. It is expanding public transportation. It is creating infrastructure that will allow people to move and to use energy more efficiently. So all of these things, you see, one way of addressing the climate crisis is to produce these things. The deindustrialized West is incapable of producing these things because it has a financial structure which is incapable of sustaining productive investment. It is allowed to, and it prefers speculation and predatory lending to productive lending. The Chinese model encourages productive activity, and the productive activity includes the production of things, of products that are necessary to address climate change.
All right, Professor, I know that was a bit of a surprise question, perhaps, but I appreciate,
I must say, I always feel a bit defensive about the climate change thing. I mean, I understand a lot about it, but I'm not a scientist by any stretch of the imagination. So.
That's what we appreciate your overall approach to that question. And so I thought that would still be helpful, and indeed it was. I think we're just about wrapped up the questions here, and so I do, of course, want to promote some things that we have upcoming for the International Committee. The first is if you're interested in this kind of more focused study about China and want to get even more involved, we are launching our first reading group starting tomorrow. This is a reading of Carlos Martinez's The East is Still Red, which provides an introduction to the governance process in China. And so, not too late to sign up, not too late to get started with the reading as well. I just put the sign up link in there. If you sign up, we'll make sure to get you looped in. The next thing I just want to promote for the International Committee is our Venceremos Fund. And so I just put the reading group sign up link in the chat. Let me just label that. But the International Committee is what it sounds like. It focuses on international solidarity work at the national level for DSA, and also it we also want to support the work of our partner organizations to the extent that we can as well. In order to do that work, though, at the scale we need, in order to be able to do things like provide aid on our delegations to Cuba, things like that, we do need to be able to fund that work. And it's important that we be able to self-fund that work as well. And so to that extent, we launched the Venceremos Fund at the end of last year. I'm happy to say we've raised a few tens of thousands of dollars already. And we're also currently in the process of any donation that you match, that you give here, that we're currently having up to $10,000 matched by our partners at the Global Health Partners right now. And so whatever you donate here will be used directly to provide aid for our comrades in Cuba, as well as future delegation trips of future aid convoys as well. So please, I encourage folks to sign up for recurring donations there. And if you want to get involved in the National Committee, you just have to be a DSA member and then go to our website, dsaic.org/apply, and I'll put that link to in the chat as well. So that's some announcements from the International Committee. Harrison, do you have anything to announce for the Housing Justice Commission?
Yeah, thanks so much, and thank you, Professor. Really appreciated your presentation here. I'm sorry, folks, earlier for not really presenting the HAC and the best when I did in the beginning. We're doing lots of really cool stuff. The first one that we got is we have the May cohort for the Emergency Tenant Organizing Committee coming up. It's the 4-week training program. That's for cadres of 3 or more to come if you want to form a new tenant union, or for individuals who want to learn about tenant union organizing, maybe then take what you've learned back to your chapter, find more people, then come to the next one and bring them with you. The other one we've got, we do our language exchange for organizing needs, Leon, every Tuesday. And that's one where we're teaching Spanish to DSA members since Spanish is the second most dominant language in the country. So if we're going to be connecting with members of the working class that don't speak English, this is going to be the way to do it. And this is all focused around tenant questions and things like that. But we're looking to expand that as well. Part of our 2025 consensus resolution gave us about $15,000 for this project. So we're excited to figure out how to work that. But yeah, other than that, check out the website that we've got for the HAC. It's got our statement on social housing. It's got all of our political education resources, as well as what our current projects are, including the Organize Your Workplace, Organize Your Building program. A big chunk of that is uh, mapping our DSA chapters and what their relationship is to local tenant unions and what the state of tenant organizing is in the organization. For that one, oh wait, yeah, I've got this link. Sorry for all the links. It's a tenant organizing survey. Um, Fill it out if you feel like you've got the time. It also has questions on there whether or not you can be a liaison for your DSA chapter, your TU, or both, things like that. But it will help us to fill out this map that we're developing. And I think that's about all I've got. So thank you so much.
All right, thank you. And Professor, can you tell us about where we can follow your work? I at least have the channel, the link to your YouTube channel. Put that in the chat. I'll put that here again. Can you tell us more about where you can find the rest of your work?
Oh, thanks for doing that. So yes, I've just recently started my own YouTube channel, Radhika Desai, Geopolitical Economist, and I have the link here as well. So I'll just put it in the chat. You can find me also. And please also do check out my work with the International Manifesto Group, www.internationalmanifesto.org. I think you'll really like some of the work we are doing. Thirdly, I also do work on Substack, so you can subscribe to my Substack. I keep it free. I mean, I ask people to help me run it, but other than that, it's free for everybody. There's no requirement to pay anything. There is one particular thing I wanted to mention, or two particular things. Number one, I'm leading a Capital reading group. So if any of you are interested in reading Marx's Capital, I really, you can join us. We are meeting next on Sunday next, so a week from now. And we're still on chapter 1. So if you want to join now and sort of, hop on while we are still at the beginning, that would be great. If you want, you can just email me about the group. Tell me you want to join it. And just email me at radhika.desai@umanitoba.ca. Let me just write that here. At umanitoba.ca. There you go. That's my email address. And finally, I wanted to suggest to you, if you're all interested in housing, as Harrison is, and some of you are here because of that, you could do a lot worse than have a session discussing Engels's The Housing Question. I don't know if you've heard about it, but it would be a really good thing to read. And so I'd certainly suggest that you do that. And finally, my website is just radhikadesai.com. So you can find me there as well.
All right, thank you, Professor, for the great presentation and for your time today. We really appreciate it. We know you're doing a lot. Thank you to the Housing Justice
Thank you so
Initiative for your
much.
great work.